Trump just pulled the financial trigger on China, ordering U.S. banks to sever ties in a move that could reshape global trade overnight. But Beijing isn't rolling over. Instead, it's threatening to unleash a $1,700 billion zero-cents Treasury dump, a nuclear option that could rattle Wall Street and push interest rates through the roof. For decades, America's debt was China's insurance policy. But now, it could become its most powerful weapon. As tensions explode between the world's two biggest economies, everyone from hedge funds to small business owners is bracing for impact. Is this the moment the global financial order cracks? Or will China's gamble backfire? Stay with us, because the next chapter of this showdown may rewrite the world economy. For years, America and China have been locked in a cold economic war. The United States accused Beijing of unfair trade practices, forced technology transfers, and currency manipulation. In return, China pointed to Washington's relentless tariffs, sanctions, and geopolitical pressure as acts of economic bullying. But what truly ignited the fuse was America's dependence on Chinese money. For decades, China bought U.S. Treasury bonds to park its trade surplus, a staggering $1,700 billion, zero-cents hoard that kept American interest rates low and fueled government spending. That dependence cut both ways. Washington relied on Chinese buying power to finance its deficits, while Beijing relied on those bonds as a safe place to store reserves. But with relations spiraling, that safety net has turned into a strategic vulnerability. Trump's executive order to block Chinese access to U.S. banks is far more than a sanctions move. It's a direct assault on China's ability to clear dollar transactions and protect its dollar reserves. To Beijing, it feels like financial warfare, and with no other leverage left, China is signaling its ultimate threat, dumping its entire Treasury stockpile on the open market. That kind of liquidation could send bond prices crashing, spiking U.S. interest rates and triggering a chain reaction through global markets. Yet even that comes with risks. Selling off too much debt too fast could also damage China's own financial holdings, wiping out years of reserve building. Still, with Trump's bank blockade on the table, Beijing may see no other choice but to strike back with the only weapon big enough to scare Washington. This isn't just another trade spat. It's the moment the world's two largest economies threaten to turn their financial interdependence into a battlefield, and no one knows where the fallout will stop. China's $1,700 billion zero-cents arsenal of U.S. Treasury bonds has long been its silent shield, a guarantee that Washington wouldn't push too hard. After all, if China holds your debt, it holds your future. But now, that shield could transform into a sword. Facing a banking blockade ordered by Trump, Beijing is weighing the unthinkable, offloading its entire Treasury stockpile to strike at the core of American financial power. If China dumps even a portion of its holdings, the consequences would be immediate and severe. Bond prices could collapse, sending U.S. yields skyrocketing and triggering higher borrowing costs for American families, businesses, and the government itself. Mortgage rates could surge, markets could panic, and confidence in the dollar could take a hit. But this threat is more than just economic. It's psychological. By signaling its willingness to dump treasuries, China is reminding Washington that financial weapons cut both ways. The sheer scale of Beijing's holdings, built over decades of trade surpluses, is big enough to jolt the entire global credit market. Of course, this is a double-edged blade. If China truly unleashed a fire sale, its own reserves would take a massive loss, and the yuan could rise, hurting its export-driven economy. Still, in a political showdown where losing face is not an option, Beijing might be willing to take that risk to protect its sovereignty. In this dangerous game of financial brinkmanship, one truth stands out. China's $1,700 billion zero-cents in U.S. debt is no longer just an investment. It is a geopolitical weapon, and if Beijing decides to pull the trigger, the entire world could feel the shockwaves. If China makes good on its $1,700 billion zero-cents treasury dump, the aftershocks will ripple far beyond Washington and Beijing. Global investors rely on U.S. Treasuries as the safest asset on Earth, the bedrock of world finance. A massive sell-off could shatter that confidence, spiking yields across Europe, Asia, and beyond. Countries with dollar-linked currencies would see chaos in their own bond markets, Emerging economies, already stretched thin by debt, could face sudden capital flight and plunging currencies. Even America's allies would feel the pain. Higher U.S. rates would choke off growth, drive up loan costs, and spark market panic around the globe. Wall Street itself could see a brutal sell-off as investors scramble to price in the shock. And while China would hurt too, many experts say Beijing is betting the West would blink first, terrified of a meltdown that could freeze world trade. In that sense, China's threat is a form of mutually assured financial destruction, and it's working. This isn't just a trade spat anymore. It's a dangerous standoff, with the power to shake the entire global financial architecture, leaving no country untouched by its fallout. While Beijing's $1.7 trillion zero-cents threat seems powerful, it comes with serious risks. A fire sale of treasuries would crash bond prices, yes, but it would also destroy the value of China's own reserves. Years of building up a safe dollar war chest could vanish overnight, putting China's financial system under enormous strain. Beyond that, a massive sell-off could trigger panic among Chinese citizens and businesses. If confidence in Beijing's stability wavers, capital flight could accelerate, with money rushing out of China despite its strict capital controls. That would put even more pressure on the yuan, raising the risk of a domestic credit crunch. There's also a global trust issue. If China is seen as willing to weaponize its reserves, other countries might grow wary of holding Chinese debt or participating in Beijing's alternative financial networks. That could isolate China in the long run, weakening the very influence it hopes to expand. So while the $1.7 trillion zero-cent treasury dump is a terrifying threat on paper, it could become a double-edged sword, hurting China as much as America and leaving both giants more vulnerable than before. In financial warfare, even victory can look dangerously close to collapse. Trump's bank blockade and China's $1.7 trillion zero-cents treasury threat have set the stage for a financial showdown unlike anything we've seen. Two superpowers, armed with economic weapons that could shake the entire world, now stand one misstep away from disaster. Will Beijing really pull the trigger, or is this just another high-stakes bluff? And if the next financial crisis comes, who will pay the price? If you want to keep up with these global shocks, like, share, and subscribe to DarkEcho News, where we expose the truths others won't. Stay prepared, because the next move could change everything.